Give me a sense here as to where you're trying to go with this.
Look, thanks for having me on, Romain. It's nice meeting you. I appreciate the opportunity. I mean, essentially, look, and to get to your question, where we're trying to go with it, I think just kind of to set the table here, we view this as a situation, and why we think this is a win-win for shareholders is that an acquisition of this segment by Ancora would actually inject about $1 billion cash into the company, which really addresses what we think is the most serious issue the company has today, which is leverage. So post AMS, which is the acquisition they announced, you mentioned at the start, that the company will have over 4 times leverage here, over $3 billion in net debt. So this allows them to deal with, in a very material way, the biggest problem the company would have. Secondly, it would allow management to focus on integrating and executing on this AMS acquisition. And thirdly, the BAS segment that we proposed acquiring is one that's lower margin and lower growth, and we think it would be better for it to be outside of that business. But I think in terms of why Ancora, why does it make sense? Some may kind of wonder about that. But look, we're operational activists. We're one of a group of people that do this type of work, and that means leveraging our industry expertise to help take companies private at times. And look, we have a deep network here in the Midwest that helps us identify roll-up opportunities. And also, what's very unique about Ancora is we're part of a broader $12 billion or approximately $12 billion asset manager that's even part of a larger parent company network. And our proposal today actually has no financing contingency to it as well.
Well, is this proposal actually fully financed? I mean, give me a sense here. Is this an actual formal bid or just a way of putting pressure on the board?
No, I think, look, we're very comfortable with what we have in that offer. That, like I said, we did not include a contingency for a reason. So, we have the ability with our AUM to finance and fund this transaction if that's the direction this goes in, and we're given the opportunity to conduct the diligence we would need as any other buyer would. But look, there's going to be a lot of parties interested in this business. I mean, this is a very unique asset, very unique company that's a conglomerate of adhesives businesses, and we know that this business is probably getting as much attention, I'm saying H.B. Fuller as a whole, probably today as anything we've seen in the chemicals market in a long time.
Well, just to be clear, I mean, have you heard from H.B. Fuller or any of its advisors yet?
No, we've not heard anything yet. I mean, that's what prompted this letter really was, we'd actually had a meeting with them. I believe it was July 7th or 8th. And at that time, we expressed interest in working with it to acquire this segment. They, effectively have not responded to us at all since that time. And we felt like, look, at this point in time, they're not going to move on what we think are the biggest critical issues facing the company. Then we had to apply more pressure here.
Well, you've had a lot of back and forth with them on a variety of things, of course, also with your objections to the Advanced Medical Solutions deal. And we had a chance to actually catch up with the CEO, Celeste Mastin, just a couple of months ago about that. And I want to play just a quick soundbite here where she was kind of defending that deal and the idea that AMS could actually be maybe a growth story for H.B. Fuller. Just take a listen real quick, Jim.
So we are the largest pure play adhesives company in the world, and we have a medical adhesives business deep within our portfolio. What AMS provides us is a platform to expand that adhesives business and set it apart as a fourth division within the company, representing about 10% of revenue and growing at high single digits.
And Jim, I mean, Celeste really kind of characterized this as a growth story for the business. And I am curious if AMS actually ends up being more of a growth story for H.B. Fuller.
It's possible it does. I mean, our objection to AMS wasn't specifically AMS as much as it was that the company had made a pledge on their Q1 call to actually freeze M&A activity to focus on deleveraging. Then they went out and announced a $940 million acquisition like this at a 15 times purchase multiple. It's extremely dilutive, right out of the gate. So that's really the issue. I think, the quality of the AMS asset might be very real and in that respect. And it also exacerbates the need to address the rest of the portfolio, which is why our proposal for BAS should be interesting to them, because it does help them solve other issues. If they want to focus on higher growth categories, higher margin categories, then we have a good way to free up capital at the company for them.
Well, that's what I'm curious about, though. I mean, you called the AMS thing reckless, but I mean, looking at the letter today for the BAS unit, effectively, this would actually kind of bolster the AMS deal to a certain extent, would it not?
Yes, it would. I mean, look, we're a shareholder of the company. We want to see the company succeed. We don't make money if Fuller fails. And so, ultimately, I think seeing AMS now that today, I believe they actually had the shareholder vote in the UK on that transaction and went through. So this is going to happen, assuming it goes through all the regulatory approvals. And now it's a function of managing these assets, driving the most value they can for the company. So we want to see H.B. Fuller succeed. But look, and I think that hopefully they view this proposal. We realize our tone sometimes is aggressive, but it's something that, whether it's us or others, we think there are plenty of parties that will participate in this.
So you would be okay, based on your current position right now, that if another buyer swooped in and said, we'll offer 1.2, 1.3 or whatever billion, basically above your offer, you would be comfortable with that?
Yeah, I mean, potentially, as long as they have the ability to finance it as we do. And if there's a competitive process for this business, we would participate in it. So I think this is a win-win, like I said, for everybody.
Yeah. Well, what happens next if the board actually doesn't engage with you? What's the next step that you're prepared to take?
Look, I think this becomes a broader strategic, activist campaign, which that's not what we look to do. I mean, we're always looking to engage privately, to work constructively behind the scenes. I mean, we did this twice in the last 9 months with companies, which were Americold and recently here with Ashland. In both situations, actually doing something just like that, putting directors into the boardroom and then seeing the share price appreciate. In this circumstance, we started that way with H.B. Fuller, and then they threw us a pretty big curveball here with AMS. But if this is a situation they don't want to address leverage, they don't want to take the necessary steps to whether it's us or others, I mean, to maximize value. I mean, we honestly think they should explore all strategic alternatives, quite honestly. There's a lot of interest in this business. So if they don't want to do any of those things and the stock continues to underperform, then I think as we get to the proxy process, we'll get to the nominating window as we get to the end of the year. We'll start doing this in the conventional sense. I mean, that's always our preference to avoid it. But if we have to, we have a long track record here of running those types of campaigns as well.